right now. We have been watching this situation. It's the 8th straight session that the stock has been trading lower. It has been trading at a record low as well. The Saudi National Bank said they're not going to be putting any more money into Credit Suisse after a cash infusion they had already done. How is this being reflected in the market? Not just in the stock, which, as we mentioned, has been plunging, but also in the so-called credit default swaps here. What is a credit default swap? It's basically a type of insurance against default here that a company can buy. So one party purchases protection from another party against losses from the default of a borrower. Again, it's effectively insurance against a company defaulting, and the price of that insurance for Credit Suisse is now basically blowing out here. Another way to measure that is to look at the different curves, the credit default swap curve, if you will. It's inverted. That means it costs more to protect against an immediate default instead of a default down the line. That's another sign of distress when it comes to Credit Suisse. So there are a lot of different measures of concern and distress that is being felt at the bank here. The chairman of the bank, Axel Lehmann, saying at a conference that government help isn't a topic here, that they're not looking for government assistance.
Because it's understood?
I don't know, or because they don't think they're in that much trouble, or it's unclear. But I do want to kind of piece through how we got to this level, because people in the U.S. don't necessarily follow Credit Suisse that closely, but it is a large bank. It is its assets are more than $550 billion or so compared to Silicon Valley Bank at around $200 billion. So the timeline is long here. It goes back even further than this when you look at some of the issues. But Tidjane Thiam became the CEO, and he was the person who was meant, he was an outsider. He was not Swiss. He was meant to sort of turn things around. And then the company just got hit by various external and internal frauds. He ended up having to be forced to step down in 2020. And then in 2021, there were the failures of a couple of hedge funds and capital firms that were really tied to Credit Suisse, Greensill Capital, Archegos Capital, and that really then accelerated, I guess you could say, some of the issues at Credit Suisse.
It really reminds me of Bear Stearns back in the day. I guess we keep reverting to these 2008 crises parallels because, well, that was a banking crisis. Not that that's going to be the centerpiece, but that's what we're dealing with today. And back in 2008, Bear Stearns failed in March of that year. So we're looking at the 15-year anniversary. But the year before, the summer of 2007, we had a couple of hedge funds by Bear Stearns that went belly up. And that was a real harbinger of what was to come in the global financial crisis. So, yeah, looking back on this timeline, you can see some of the echoes, or at least some of the fingerprints that are similar between these two entities. Right.
So there was a money laundering criminal conviction at that was related to the bank that ended up happening in 2022. It was for money laundering in Switzerland. It was connected to a Bulgarian drug smuggling ring. You get the idea here. So the CEO that succeeded Tidjane Thiam was Thomas Gottstein. He was forced out. There was a new CEO, Ulrich Körner, that came in. And then back in October, the company cut 9,000 jobs. It got a capital injection at that point. It also ended up reporting a loss for last year. And then more recently, just in the past week, the company said it had found material weaknesses in its accounting and delayed its annual report. So that was tied up in the most recent slump that we've seen in the stock.
Right.
But more broadly, at a time when the international banking system is in a very delicate position because of SVB. They're worried about where the other vulnerabilities are. Here comes Credit Suisse with what look like a lot of vulnerabilities.
Yes. And let me I want to put this in the context of maybe a 50,000-foot view here. This is, we don't face anything like the situation that we faced in 2008 for a number of reasons. The Federal Reserve has just guaranteed all FDIC deposits above $250,000 in a bank. That means your money in a U.S. bank is safe right now. So all these people Googling, where is my money safe? Do I need to pull money out of my bank? Your money is safe if it's in an FDIC-insured bank here in the U.S. What we're talking about are the effects for investors, people who have bought the bonds and stock of some of these banks. And then we're also separately talking about Credit Suisse, which is a European bank, and all their troubles right now and how that might be resolved. And we could talk about that for a while. There's contagion effects, yes, and there will probably be not just the 3 or 4 banks that we've seen run into trouble now. There'll probably be more, but does it develop into a full-blown crisis, or is it kind of a piecemeal thing where it's dragged out over years? I see it more like the dot-com crash where we had Enron, WorldCom, then we had in 2008 where we had a cascade of failures, everything at once.
Right, exactly. This does not feel like that.
Right, like the ground is falling out.
And I think that's a really good distinction that you made between like people holding money at banks. Do not go to your bank and pull out all your money. I think don't do that. If that's what people are thinking about out there, this does have implications for investments. It potentially has implications for the economy. Doesn't have implications for the safety of funds at FDIC-insured institutions.
You bet.